Have you ever wondered why so many traders fail, while a select few amass incredible fortunes in the markets? What separates those who consistently profit from those who repeatedly lose their capital? The answer might be simpler and more profound than you imagine. Picture this. Two traders with identical starting capital enter the market on the same day. 1 year later, the first trader has quadrupled their money while the second is nearly bankrupt. What happened? Was one simply luckier than the other? The legendary Jesse Livermore would strongly disagree. But before we begin, please hit the like button and let me know where in the world you're watching from today. It's always fascinating seeing who's joining us from around the world. And if you haven't already, make sure to hit that subscribe button and turn on the notification bell so you don't miss any of our future videos. The most profitable business in the world is speculation, Livermore famously stated, provided you know what you are doing. And the most ruinous pursuit is speculation, provided you don't. This profound insight forms the foundation of successful trading psychology, a truth many discover only after suffering significant losses. Has this ever happened to you? You enter a trade with high hopes, take a quick profit when the position moves slightly in your favor, only to watch in frustration as the stock continues climbing for days or weeks afterward. Or perhaps you found yourself frantically jumping from one stock to another, chasing every minor price movement, yet ending each month with diminishing capital. The market rewards patience, discipline, and study, not excitement or the thrill of the chase. Stay with me until the end of this video series, because understanding this principle alone could transform your trading results forever. What separates amateur speculators from professionals isn't intelligence or access to information, it's their approach to market movements. While the masses frantically chase every tick on the tape, the skilled trader sits quietly, studying patterns and waiting for those rare, powerful moves that create true wealth. Fortunes are caught by catching the big moves, Livermore insisted, and catching them before they are plainly visible to the crowd. Think about that for a moment. The real money isn't made in quick scalps or day trades. It comes from identifying major market shifts before they become obvious to everyone else. What you're about to discover might surprise you, especially if you've been conditioned to believe that successful trading requires constant activity. The truth is quite the opposite. Most speculators lose precisely because they try to catch every minor swing instead of patiently waiting for significant movements. Consider the difference between catching a 1–2% move 20 times with commissions and inevitable losses versus identifying and riding 1–30% move. The mathematics and psychology of these approaches couldn't be more different. And yet the allure of constant action pulls most traders away from the strategy that actually builds wealth. Subscribe now to access more trading wisdom that could transform your market results. Join thousands of traders who are mastering these timeless principles. The real journey of transformation in trading begins when you realize that your natural instincts often work against you. Think about it. What feels better? Taking a quick 5% profit today, or watching your position fluctuate wildly as you hold for a potential 50% gain? Our psychological wiring pushes us toward immediate gratification, the comfort of securing small wins. And yet, this very instinct sabotages our long-term success. Livermore discovered this hard truth through painful experience. There were days in my youth, he reflected, when I was content to take a quick profit. I'd snatch a point and feel proud, only to see the stock march on 10 points without me. This revelation fundamentally altered his approach to wealth creation in the markets. The hidden truth that many never grasp is that substantial wealth isn't built through an accumulation of small gains. It comes from having the courage and conviction to let your winners run their full course. This mindset shift represents one of the most powerful decisions any trader can make. the decision to overcome emotional impulses and embrace the natural rhythm of market cycles. Now, I want to go even deeper into this topic by exploring how these profitable big moves actually begin. Because, contrary to popular belief, they don't arrive with trumpets blaring and neon signs flashing, "Buy now." The reality is far more subtle. The most significant market moves start quietly, almost imperceptibly. While the crowd is distracted by noise and sensationalism, the professional trader notices those subtle shifts in market behavior, a stock becoming stubborn on declines or heavy on rallies. These whispers from the market contain invaluable information for those patient enough to listen. By the time a stock makes headlines or becomes the talk of social media, its move is often already half complete. The public rushes in precisely when smart money begins contemplating their exit. This behind-the-scenes reality explains why most retail traders consistently find themselves buying near tops and selling near bottoms. The journey toward mastering this awareness requires a profound shift in perspective. Instead of chasing stories or following the herd, the successful trader learns to read the market's language through price action. This is where true revelations occur, in the quiet observation of how stocks behave, not in the headlines that attempt to explain that behavior after the fact. Consider how differently a professional approaches the market compared to an amateur. While the novice frantically searches for tips and breaking news, the seasoned trader sits calmly observing price movements, volume, patterns, and market structure. One operates from reactive emotion, the other from patient observation. The impact of this difference on trading results can't be overstated. The professional understands that the market communicates its intentions through action, not words. When a stock continues advancing despite negative news, that's significant. When it struggles to rally on positive developments, that's equally telling. These subtle clues reveal the underlying forces at work, forces that will eventually drive those big, profitable moves. If you've experienced those moments where you sold too early, only to watch in frustration as prices continued climbing, write in the comments, "I've left money on the table." This acknowledgement is actually the first step toward transforming your approach to the markets. Let me share a fundamental truth that changed my entire perspective on the markets. Successful trading isn't about prediction, it's about patient observation. This revelation strikes at the core of how most people approach investing. They believe the key to success lies in accurately forecasting what will happen next, in guessing right consistently. But Livermore understood something much more profound. The trick is not guessing, he insisted. No man can guess right consistently. The trick is observing, waiting, and acting only when the tape tells you the move is about to unfold. This mindset shift from prediction to observation transforms a trader's entire approach to the markets. Consider the wisdom in this strategy. Instead of trying to anticipate the future, an impossible task that has humbled even the brightest minds on Wall Street, the skilled trader simply waits for the market to reveal its intentions through price action. This patient approach aligns you with the natural flow of market movements rather than fighting against them. But here's the challenge that tests every trader's character. Can you bear the waiting? Can you sit idle? Sometimes for weeks, while the market does nothing worth your stake. Most cannot. They grow restless in the silence, anxious in the absence of action. This discomfort drives them to fritter away their capital on meaningless trades. And when the genuine opportunity finally arrives, they've exhausted both their resources and their courage. Now, I want to go even deeper into this philosophy by examining what actually matters in speculation. In a world saturated with opinions, analyses, and predictions, Livermore discovered that only one reality exists in the market: price and its behavior. Everything else, no matter how eloquently presented or logically argued, is simply noise. "The price is never wrong," he observed. "The crowd may chatter, the newspapers may deceive, but the price never lies." This powerful insight cuts through the complexity that often paralyzes traders. Rather than being overwhelmed by conflicting viewpoints or intimidated by sophisticated analyses, the professional trader focuses exclusively on what the market is actually doing, not what others are saying about it. This journey toward trading mastery requires a complete recalibration of your attention. Instead of being distracted by the latest headlines or swayed by persuasive narratives, you learn to direct your focus toward the only unbiased indicator in the market: price action. This deliberate shift represents a form of liberation, freedom from the confusion and contradiction that plagues most market participants. Behind the scenes of every significant market move, this truth plays out with remarkable consistency. While commentators debate reasons and analysts construct elaborate theories, price quietly reveals the market's true direction to those patient enough to observe it. The stock that refuses to decline on negative news, the sector that advances despite poor economic data, these subtle behaviors tell a story far more reliable than any expert opinion. The catalyst for transformation in your trading results begins with this simple question: are you watching what others are saying about the market, or are you watching what the market itself is saying? If you've recognized this distinction as the key to a deeper understanding of price movements, type "price tells the truth" in the comments below. When you recognize that unmistakable moment, when a stock begins moving along its natural course and the line of least resistance becomes clear, something profound happens in the market. This critical juncture represents the exact point where ordinary traders and extraordinary traders diverge on their separate paths. Livermore understood this decisive moment better than most. Click subscribe to continue your journey into market mastery. I share powerful trading insights just like these that you won't find elsewhere. There comes a moment when the stock begins to move along its natural course, he explained. The line of least resistance presents itself, and that is when the speculator must act with courage. No hesitation, no half measures, no timid probing. This insight illuminates the catalyst that transforms potential into profit. When the signals align and the market reveals its intentions, conviction becomes the currency of success. Consider the psychological landscape of this moment. While most traders timidly test the waters with small positions, afraid to commit fully despite clear signals, the professional plunges with confidence. This isn't recklessness. It's the calculated courage that comes from patient observation, finally meeting its moment of opportunity. The breakthrough realization is that fortunes aren't built on dozens of small trades, but on a few significant moves executed with unwavering conviction. But the journey doesn't end with entry. In fact, the most challenging terrain often lies ahead in how you manage your position once established. This brings us to one of Livermore's most penetrating insights about human nature and its uncomfortable relationship with profit and loss. When we are in profit, we grow nervous, he observed. We fear the market will snatch it away, so we sell out too soon. And when we are in loss, we grow hopeful. We cling to the stock, praying it will turn, refusing to admit our mistake. This is exactly backward. This revelation exposes the hidden truth about why so many traders fail despite understanding market mechanics. Their psychology betrays their strategy. The irony is striking. Our natural impulses push us to cut profits short and let losses run, precisely the opposite of what successful trading demands. This instinctive behavior creates an invisible barrier to consistent profitability, one that can only be overcome through deliberate mindset reconstruction. The transformation begins with awareness, develops through discipline, and culminates in a completely new relationship with both profit and loss. Behind the scenes of every successful trader's journey lies this fundamental battle against human nature, the ability to sit comfortably with growing profits, resisting the urge to capture them prematurely, represents a psychological achievement few ever master. Similarly, the courage to acknowledge mistakes quickly and exit losing positions before they become devastating requires a rare form of emotional intelligence. This counterintuitive approach, cutting losses quickly while allowing profits to expand, stands as perhaps the single most powerful principle in all of trading. Yet its implementation demands something beyond technical knowledge or market understanding. It requires a deep recalibration of your natural responses, a rewiring of instinctive reactions that have likely been with you your entire life. The revelation that transforms ordinary traders into extraordinary ones is the recognition that success in the markets doesn't come from following your instincts, it comes from consciously overriding them. If you've ever struggled with selling winners too soon while holding losers too long, type "fighting my instincts" in the comments to acknowledge this universal challenge. To truly unlock the market's secrets, we must shift our focus from what people are saying to what the market itself is doing. This fundamental principle separates professional traders from the perpetual amateur. To catch a big move before it starts, Livermore observed, one must be a student of the market, not a follower of the crowd. This distinction represents the crossroads where most trading journeys either flourish or falter. Consider what happens in typical market analysis. Most participants fixate on opinions, analysts' predictions, financial news, social media commentary, rather than studying the actual behavior of prices. This misplaced attention creates a dangerous illusion of understanding while masking the real narrative unfolding in market action. The wisdom emerges when you begin asking deeper questions. Who is buying? Here, who is selling? What does the character of this advance or decline reveal about underlying strength or weakness? The transformation occurs when you realize that market action contains within it the complete story. Volume patterns, price behavior, support and resistance encounters. These elements speak a language far more reliable than any expert commentary. While the crowd reacts emotionally to headlines and rumors, the professional trader observes these technical footprints with disciplined detachment, deciphering what the market is actually communicating. This journey toward market mastery requires a fundamental mindset shift, developing the capacity to tune out the noise while tuning in to the signal. Behind the scenes of every major market move, this process unfolds with remarkable consistency. The signals appear first in price action, sometimes days or weeks before the corresponding news catches up to explain the movement that's already underway. Now, I want to go even deeper into this philosophy by examining one of Livermore's most profound observations. The market is never wrong, only opinions are. This revelation strikes at the heart of why so many traders struggle despite their intelligence and effort. They enter the market with preconceived notions about what should happen, then fight against reality when their expectations aren't met. Men destroy themselves, Livermore noted, by fighting the market, by trying to impose their will upon it. This pattern plays out with tragic predictability. A trader believes a stock is undervalued, so they buy. When it continues falling, they buy more, convinced the market must eventually recognize their superior insight. This battle against market reality inevitably ends in defeat, often catastrophic in scale. The hidden truth is that the market doesn't move because you think it should. It moves because it must. Your opinion about a stock's value, a company's prospects, or a sector's potential means nothing against the collective wisdom expressed through price action. The market represents the sum total of all participants' decisions, a force far more powerful than any individual's perspective. This realization doesn't diminish your power as a trader. It actually enhances it. By aligning yourself with market reality rather than fighting against it, you harness a force of incredible magnitude. The market will tell you when it must move, revealing its intentions through price action. If you've developed the rare ability to truly listen, if you've ever found yourself fighting against the market instead of flowing with it, type "surrender to the market" in the comments as a reminder of this essential principle. Once you've aligned yourself with the market's natural flow, you'll face what Livermore considered the ultimate test of a trader's character: the ability to sit tight once you're in a profitable position. "It never was my thinking that made the big money for me," he revealed. "It was my sitting tight." This insight illuminates perhaps the most challenging aspect of the entire trading journey, one that few ever master. Consider the psychological terrain you must navigate after catching a significant move. The market rarely advances in a straight line. It pauses, it retraces, it shakes, it falters, all while continuing along its ultimate path. During these fluctuations, your resolve faces its greatest challenge. The crowd screams that the top is in or the bottom is made. Financial media amplifies every minor setback. Your own anxiety whispers that you should lock in profits before they disappear. This inner battlefield represents the true crucible of trading mastery. While most believe the hard part is finding good trades, the real challenge begins after you've entered them. The transformation occurs when you develop the rare capacity to endure market volatility without abandoning your position, when you learn to distinguish between normal fluctuations and genuine reversals. Behind the scenes of every great fortune made in the markets lies this untold story of psychological endurance. The trader who captures the full measure of a major move isn't necessarily more intelligent or better informed. They simply possess the uncommon strength to remain steadfast while others succumb to fear and impatience. Now I want to go even deeper into this wisdom by exploring one of Livermore's most illuminating observations about market history. "There is nothing new in Wall Street," he declared. "What has happened before will happen again and again and again." This profound insight reveals the timeless nature of market behavior, a reality that offers both comfort and opportunity to the thoughtful trader. The revelation here is that despite technological advances, regulatory changes, and evolving market structures, the fundamental patterns of price movement remain remarkably consistent. Why? Because these patterns don't emerge from technology or regulation. They emerge from human nature, which remains unchanged across centuries. The same emotions that drove markets in Livermore's era, greed, fear, hope, and impatience, continue driving them today. This continuity creates an extraordinary opportunity. By studying historical market behavior, you gain insight into future movements. The same patterns repeat because the same human psychology generates them. Market cycles, sector rotations, bubble formations, panic sell-offs, these phenomena recur with striking similarity precisely because human emotional responses remain consistent over time. This perspective transforms your relationship with market study. Instead of chasing the latest trading fad or newly developed indicator, you recognize the value in understanding timeless principles and recurring patterns. The wisdom of past market masters becomes not just historically interesting, but practically applicable to today's trading challenges. If you've noticed how certain market patterns seem to repeat throughout your trading experience, type "history rhymes" in the comments to acknowledge this powerful continuity in market behavior. Let's address one of the most alluring traps in all of speculation, the seductive whisper of a hot tip that promises easy profits without effort. There is no greater trap in speculation, Livermore warned, than listening to the chatter of others. This insight penetrates to the core of why so many intelligent individuals fail in the markets despite their capabilities in other fields. Consider the psychology behind our attraction to tips. When someone shares inside information or a can't-miss opportunity, something powerful happens in our minds. The uncertainty of the market suddenly seems manageable. The complexity becomes simplified. The responsibility for decision-making shifts from us to the source of the tip. This psychological comfort explains why, despite overwhelming evidence of their unreliability, tips remain eternally popular. But Livermore saw through this illusion with crystal clarity. A tip is nothing but another man's opinion. And if opinions made fortunes, every broker's office boy would be a millionaire. This revelation exposes the fundamental flaw in tip-based trading. It substitutes someone else's judgment for your own. It shortcuts the necessary process of personal analysis and conviction that forms the foundation of sustainable success. The awakening occurs when you recognize that tips represent a false promise, a mirage in the desert of market complexity. People seek them not because they work, but because speculation is difficult and discipline is harder. The human mind naturally gravitates toward shortcuts to wealth, but in the unforgiving arena of the markets, such shortcuts invariably lead to financial ruin. Now, I want to go even deeper into this wisdom by exploring what actually does contain reliable information. Every great mistake I ever made, Livermore reflected, came from trusting something other than the market itself. Every great success I ever had came from listening only to the tape. This powerful contrast illuminates the authentic path to market mastery. The revelation transforms your entire approach to analysis. Instead of seeking external validation through tips, stories, or expert opinions, you develop the rare capacity to read the market's own language, price action. This shift represents a form of liberation, freeing you from dependence on others' interpretations while connecting you directly to the most reliable source of market truth. Behind the scenes of every significant market decision lies this fundamental choice. Will you trust the story someone tells about the market, or will you trust what the market itself is telling you? The price action contains everything you need to know. If insiders are buying, it will show in the action. If institutions are distributing shares, that too will be revealed. The market has a remarkable way of displaying its intentions in advance for those patient enough to observe. This journey toward independence requires cultivating a certain skepticism toward narratives while developing deep respect for price behavior. The mindset shift doesn't happen overnight. It emerges through repeated experiences of seeing how often the market's action contradicted the prevailing story, only to prove itself right in the end. Each such instance reinforces the wisdom of trusting what you see, rather than what you hear. If you've ever noticed how the market's actual behavior frequently contradicts the popular narrative about it, type price over story in the comments to acknowledge this fundamental market truth. Among the many paradoxes of successful trading, perhaps none is more counterintuitive than this. Doing nothing is often more profitable than doing something. The hardest lesson I ever learned, Livermore confessed, and the most expensive, was that doing nothing can often be the most profitable course of all. This revelation challenges the very foundation of how most approach the markets. Consider the common belief that successful trading requires constant activity, that buying and selling frequently demonstrate skill and intelligence. Walk into any trading room and you'll witness this illusion in action: screens flashing, orders flying, traders in perpetual motion. The activity itself creates a sensation of productivity, of making progress, of being in the game. But this sensation masks a profound truth. The market doesn't pay for activity, It pays only for being right. The awakening occurs when you realize that being right comes not from constant motion, but from disciplined waiting until the perfect moment arrives. This mindset shift represents one of the most challenging psychological hurdles in the entire trading journey. Our cultural conditioning tells us that reward comes from effort, that results require action. Yet, in the unique arena of the markets, this equation often works in reverse. Behind the scenes of every great trader's development lies this uncomfortable discovery. Waiting is work. Sitting patiently, observing the market without acting, maintaining vigilance while restraining impulse. These seemingly passive states actually demand intense mental discipline. The transformation happens when you begin to view patience not as inaction, but as a form of powerful action. The deliberate choice to preserve capital until genuine opportunity emerges. Now, I want to go even deeper into this wisdom by examining what happens when that perfect moment finally arrives. Because after the long wait, after the patient observation, comes the ultimate test. The courage to act with conviction when the signals become clear. There is no greater dividing line in speculation than this, Livermore observed. This insight illuminates the decisive factor that separates those who capture major profits from those who merely identify good trades. Consider the psychological landscape of that critical moment. You've done your homework. You've waited patiently. The setup appears exactly as anticipated. The market has given its signal, and now your finger hovers over the button, your pen poised above the order ticket, and something happens. For most traders, doubt creeps in. Hesitation takes hold. The mind generates reasons to wait, to start small, to test the waters rather than commit fully. This crucial juncture reveals the true character of a trader. While most nibble timidly at opportunity, taking small positions that yield small results, the professional acts with decisive conviction. This courage doesn't emerge from recklessness, but from confidence built through patient observation, the deep knowing that comes from reading the market's own language. The revelation transforms your entire approach to position sizing. When signals are unclear or setups incomplete, caution is warranted. But when the market reveals its intentions with clarity, half measures become a form of self-sabotage. The trader who recognizes a genuine opportunity but lacks the courage to act proportionally has, in essence, wasted the opportunity itself. If you've ever identified a perfect setup but failed to capitalize fully because of hesitation or doubt, type "courage of conviction" in the comments to acknowledge this critical trading challenge. As we've explored these timeless principles from one of history's greatest traders, I hope you've recognized some profound truths about your own trading journey. Livermore's wisdom reminds us that success in the markets isn't about complicated strategies or inside information. It's about patience to wait for the right moment and courage to act decisively when that moment arrives. These insights have transformed my own approach to trading, shifting my focus from constant activity to purposeful patience, from seeking tips to studying price action. The market rewards this mindset. Shift in ways that few other endeavors can match. If something in this video resonated with your own trading experience, whether it's the challenge of letting winners run or the discipline of waiting for clear signals, I'd love to hear about it. Drop a comment with "Livermore's wisdom speaks to me," so I know you made it all the way through this exploration. If you found value in these insights, consider hitting the like button. It helps others discover this timeless wisdom that's just as relevant today as it was a century ago. And if you're ready to continue this journey of trading mastery, subscribe to join our community of thoughtful traders focused on real market principles, not hype or quick fixes. Right here, I've prepared a video that builds on these foundational concepts, showing how to identify those specific price action signals that Livermore himself might have recognized. Click on it now, and let's continue uncovering the authentic path to trading success together.